Good morning, and thank you for joining today's webinar program. My name is Chris Counter. I'm Executive Vice President, General Counsel here at Insurance Agency Marketing. Today's video program will be joined with Andrew Herrera and Tia Stanley with North American. Welcome, both of you.
Thanks for having us,
Tia?
Chris.
Yeah, thank you.
Yeah, thanks for joining. We're excited about this. This is part 2 of our Storm on the Horizon series in partnership with North American Company for Life and Health. And, it's a topic that's got a lot of attention in the course of the year. I think people are concerned, clients are concerned about impending tax changes, what that's going to mean for clients, retirement dollars, protection dollars, and we know there's been a lot of changes. Heck, this Wednesday, the Senate Democrats passed a 3.5 trillion budget blueprint that would allocate some extra spending for education, paid leave, healthcare, climate change type of initiatives, and in turn raising funds for those measures through higher taxes, primarily taxes on the wealthy, wages, income tax bracket going up, cap gains going up, and relief maybe for some of those deductions that are out there. But another big component of that is I think the risk that the estate tax limits are going to change. And so we have currently a 40% tax rate on those estates over 11.7 million single or 23.4 married, which allows for a step up. So a lot of noise there. We're pleased to have both North American's Annuity and Life side represented today, and great partners. North American's been a leader in the annuity and life space for so long. Great partner here with IAMS. And so today's program, I'm going to run through a couple slides about insurance agency marketing. A lot of you are familiar, but if you're not as familiar with who we are, kind of the value prop and what we can do to help you with your business, I'm going to run through that for a couple minutes. There'll be a couple polling questions along the way, so I encourage you to respond to those polling questions, get you more information, and then we'll move quickly into our program with Andrew and Tia. First, I just wanted to share our new producer builder programs, and those who are newer to IAMS I want to go run through this. So these are bonuses that are available based upon your production level in your first 180 days or 6 months after contracting with us, and a lot of great levels there you can see, you can qualify for, and you see those different options that are available to it. This is a good way to put money back into your business, build it, some perks and cash rewards if you like, to help you grow your business. So check that out again. First 6 months, opportunity to earn some additional money and benefits for your business. And the next thing is our business builders program. So that one, we have a referred producer program. You can get a $50 thank you for any referred agents over. In addition, we have our market reimbursement program. So roughly for about every $100,000 in index annuity premium, you get $100 into your marketing reimbursement account. We count all your business, either life target, index, annuity, SPL, MIGA, everything counts towards that market reimbursement program. One thing that's different than many of the other carriers, or IMOs that have these kind of programs, we don't have a cap, and we don't tell you where you need to spend your money. We don't tell you which vendors you have to use, so everything really qualifies for that. Back office support is really a key to who IAMS is. When we founded the company back 36 years ago, designed to really serve that independent advisor you, and to work smarter, not harder. So all the way from things like advanced case design, life and annuity quotes, illustrations, quick turnaround times, everything submission through commission is going to be handled here by your support team. So just know that we are there to help you grow your business and also make your business go through smoothly. We're on Insurance Bay platform, which a lot of you are familiar with. Easy way, that paperless contracting to get you appointed with various carriers quickly. Firelight. So we do have access to Firelight. We have our own single sign-on at iamsinc.com. A lot of you are on this, are familiar with it. If you're not, it's a great e-app platform that makes your business move through very quickly. We also have we're on the iPipeline as well to help expedite your cases on the life side. Talk to your sales director, or certainly can walk you through that first case if you're not familiar or you'd like to get to know a little bit more about Firelight. Carriers, we have just a select group here. North American, obviously one of our core carriers we're supporting. This is just a selection of the broad catalog we have. Just know we have many, and it's important to, as an independent marketing organization, have those different carriers to get your cases placed. Yeah, creative marketing is a key part also to help you grow your business here. And we have a full in-house creative team that can help you along the way, whether it's something simple like handouts or flyers, postcards, business cards, logos, etc., all the way through more sophisticated design, digital solutions, whether it's websites, digital marketing, social media. Just know we have a full catalog of services available to you, and let us use our expertise here to help you grow your business. I'm going to launch a first polling question about that. We do a complimentary market analysis for you if you would like. We got many hundreds of other agents we've done this for, or agency heads, where we can take a deep dive into your business, particularly take a look at your digital marketing presence, and if it's something you'd like us to do a quick review with you and come back with suggestions on how we can grow your business and make sure you have your marketing aligned with what you want to do. Go ahead and answer yes. I know we have a number of people who are always interested in helping you. And I'll close that polling question now. Yeah, moving on to our website, IAMSinc.com, which mentioned in the past here is really simple to use. A lot of great resources and tools available there. Sales tools, term quoters, industry news, lots of product grids and so forth. So we get you set up. If you're new to IAMS, contact your sales director. Certainly walk you through that website. Make sure you're aware of what all those great resources are that are available to you. Then our macro tax planning kit. So we sent this out to a lot of our customers about a month ago. These are just 3 of the 20 some tax pieces that we have. So these are point of sale, very client friendly point of sale pieces that you can use, fact finders, 1040 overlays, and social posts. The key here is this is an opportunity to position a great marketing piece in front of your client to talk about what the impact of taxes can be on their retirement and their protection planning. So let me launch a polling question. A lot of people are interested in this tax planning kit. If you're interested in getting, this is just 3 of several different pieces, but if you like these pieces, you can use at point of sale. Outstanding to help explain to a client in real simple terms what the impact of some of the big tax changes will be, and some opportunities to think about life insurance and annuities as a solution. So if you're interested in that, go ahead and answer yes. We'll get your votes captured here and close that poll down. We do have a big incentive trip. So we do our annual, it's actually an 18-month top producer summit. So our next one, you see the locations, is a Mediterranean cruise. This will be August 28th through September 4th of next year. Not too late to qualify. That ends at the end of June 2022. All of your annuity and life business counts. Gets you more details if you're interested, but this is a top-notch trip. We have a history of doing really top flight quality trips. Good way to network and connect with other top producers. So get you more details on that if you're not familiar with it, but I want to make sure you're aware that we have that event. Then our academies, and this will be our last polling question. So we do great life and annuity academies. We have a couple-day producer event. We're pleased to have the partner with Tia and Andrew in North American here coming up November 3rd, 4th, 5th in West Des Moines. So all expense paid trip up there. We'll have top producers speaking. Obviously hearing directly from North American, their leadership and product lineup and how we can help. This will cover both indexed annuities and life insurance. So expect to see that. A lot of sales and business concepts. And again, hearing from some of the very top producers in the country that'll be there. I'll launch a polling question. If you're interested in that academy, get some more information about whether you might qualify for it. Go ahead and answer yes, but I'll tell you, we're just going through the list this morning, so we already have a pretty good list we're building for North American, and so we're excited about that. We got a couple months here before that goes, and if you're interested in that academy, again, in West Des Moines, we'll be pleased to get you more info on it and see if that's a good fit for you. Close down that polling question here in a second. Okay. And we have a great social media presence. So if you see us out on Facebook and LinkedIn, encourage you to check us out, like and share that. And with that, I'm going to transition over to Andrew. And again, Andrew, thank you for being here with us today. And he's going to cover kind of the impact on the life insurance side. So hopefully, Andrew, you can load up your slides there. We can do that. Andrew's the Regional Vice President of Life Insurance for North American Company. Thank you. Been a great partner and appreciate the partnership with North American and with you. Andrew?
Oh, thank you, Chris. Appreciate it. And yeah, we appreciate likewise the partnership with IAMS and with you all. So thank you for having us this morning. Really appreciate the opportunity, both Tia and myself on the annuity side, myself on the life side, to be with you all. And really, as Chris mentioned, what we want to highlight is kind of this pending storm that's on the horizon, right? How is what's happening in Washington, D.C. going to impact us? How is it going to impact clients, more importantly? And is there anything, right? If you're an agent who's tuning in to this today, or maybe you watched the recording, later on, is there something that you can circle back with your clients to help put them in a better position? And that's a little bit of what we want to talk about this morning. So, as Chris mentioned, my name is Andrew Herrera, Regional Vice President on the North American Life side. And if I can pull up my agenda here, here's what I want to cover. Just briefly, the potential tax changes that we see, are likely to happen. Maybe to not exactly verbatim as we're going to go over here, but we're likely going to see some change come out of Washington. And then most importantly, what are the opportunities for tax advantage planning, like I said earlier, to put your clients in a better position to take on those challenges? So if we look at where taxes are today, right, if we look at individual income tax rates, we've got a top rate of 37%. And really to enter into that tax rate, so to be in the 37% tax bracket, if you're married filing jointly, you would have a combined income over $628,000, would put you in that top tax bracket. And we know that capital gains tax relatively low, currently, but it does differ, based on income. Now, what we saw, at least from President Biden when he was on the campaign trail, was he was talking about raising that top tax bracket slightly from 37% to 39.6%, but probably what would cause a bigger impact would be lowering that threshold to get into the higher tax bracket. So instead of a combined income of $628,000 or above, now there's talk of if you have combined income of $400,000 and above, that would now put you in a higher tax bracket. In addition to that, there's discussion of higher alternative minimum tax, or higher AMT. There's also discussion of if there's investment income over $1 million, that the cap gains tax on that could possibly be different. Elimination of carried interest loophole, which benefits a lot of families. And while the 401k deduction, again, there's discussion about that changing, the biggest impact would be to those high income earners that are likely contributing a lot to their 401k. They actually might see a negative impact if some of the discussions we're talking about in Washington passes. So, I guess the summary in all this, if you take away anything, is that we're likely to see a change in individual tax rates that could especially impact those, again, if you're 400,000 combined income or above. Even if you're not 400,000, there could still be an impact because as those tax brackets get lowered, that is a threshold to enter into them. We can see a lot of people in middle income, America, be impacted by that and have to pay higher taxes. Here's a chart I like to show just to give you a little context, right, of where taxes are today to where they were in the past. Because I know sometimes we forget, and I think it's really easy to forget, that where we find ourselves today historically is in a really low tax rate environment. If you were to look at a chart of where tax rates have been historically since inception, you would see that we are at a really, really low point today, especially related to the amount of debt that we have as a country. And so, for example, if you are, let's just say, married filing jointly, so you're a married couple today, and your income is, combined income, let's just say it's $150,000. Well, that would put you in the 22% tax bracket today, right? Because you're not quite at the 168,000, that puts you in the 24% tax bracket. So being $150,000 of income would put you in a 22% tax bracket today. Now, if you look back to 1980, and you think, okay, what if a married couple was making $150,000 in 1980? What tax bracket would they be in at that point? 64%. 64% compared to today, 22%. Well, you might say, Andrew, that's not fair. It's not a good comparison because of inflation. $150,000 in 1980 isn't the same as $150,000 today. And you would be right. I think that's a fair assessment. So if we factor in inflation, $150,000 today would have been about around 46,000 in 1980. So even using that, adjusting for inflation, we're talking about a 49% tax bracket in 1980 compared to 22% today. And my point is to show you that, again, we are in a relatively low tax rate environment today, and it's likely not going to be sustained in the future, regardless of which party is controlling Washington. I think that the amount of debt that we have as a country and our future obligations, you're likely going to see an increase in taxes. And if you are someone who is accumulating, right, saving for retirement, and you're thinking, oh my gosh, if taxes go up when I retire, what sort of impact is that going to have on my retirement income? Now let's pivot here. Let's look at estate taxes, which Chris commented on that as well. And he talked about the current estate tax exemption, of course, 11.7 million and above. You would need to have an estate larger than that to really be impacted by that 40% estate tax today. So not a whole lot of families that are being impacted due to today's current estate tax exemption. And as Chris mentioned, you also get a step up in cost basis, which is really beneficial for those surviving spouses. But that's not likely to be sustained in the future. So again, going back to what the Biden estate tax plan is, it's lowering that exemption from the current 11.7 million down to 5.85 million. Now, President Biden, is talking about possibly keeping the estate tax rate the same at 40%. But that may sound good by keeping the estate tax rate. When you eliminate the step up in basis, that would be really a negative impact to a lot of those estates. And if the administration increases the capital gains tax as well, that would impact a lot of families. But it doesn't end there, as evidenced by what we've seen in the Senate. So if we look at what's happened in the Senate, there's other plans that are even looking to go farther than President Biden's plan. There's the Ultra Millionaire Tax Act, which was submitted in the Senate, I believe, by I forget what senator proposed that, but she was saying, an annual tax of 2% on any large estates is what we should be looking at. We know that Senator Bernie Sanders' plan, which is called For the 99.5% Act, is saying, we should have progressive tax rates. And by the way, it was Elizabeth Warren with the Ultra Millionaire Tax Act. So Senator Sanders' plan is saying we need to lower the estate tax exemption down to $3.5 million. And not only would we lower the exemption, but we would really jack up the estate tax rates much higher than the 40%. And it goes beyond that. They're talking about generation skipping tax, GST enhancements, basically restrictions, or I think restrictions being generous, more of an elimination, possibly of grants and valuation discounts would be impactful on a lot of people. So now we're talking, again, today's environment all the way on the left, there's not a lot of families that are impacted by the 11.7 million. But if that gets lowered to somewhere in the neighborhood of 3, 4, 5 million, there's going to be a lot of families, a lot of businesses, a lot of individuals are going to be impacted by not just the lowering of the exemption, but the possible increase on the estate tax. And so again, it begs the question, how are these families, how are these individuals, how are these businesses, how are these farmers going to plan around this? Now, we've been highlighting on things that are likely to happen, right? And again, I really believe that we're going to see some change as it relates to individual income tax and the estate tax. But let's also highlight stuff that's already passed, something that's already changed. And that was, what we saw at the beginning of 2020 with the elimination of the stretch IRA, right? And the stretch IRA was a great tool used often to transfer wealth, where you can have a non-spousal beneficiary on an IRA. You can name kids, you can name grandkids, you can name a trust, you can name a charity. And the great thing is when you passed, those funds that were in qualified dollars would be allowed to be withdrawn based on that recipient's life expectancy. And so that's why, we called it stretch IRA, because they were allowed to stretch those withdrawals over their lifetime. Again, that really minimizes the tax impact. Well, that went away with the passing of the Secure Act. And so now the new rules say if you have a non-spousal beneficiary, you no longer have the rest of your life to take out those funds. You've got a maximum of 10 years. And so the tax impact of that, when the Secure Act passed, is it says, beneficiary, when you get those funds, you now have 10 years to realize that as income. And without spreading that out, that's going to, again, that could put people in a new tax bracket. It certainly is unplanned for them. All that to say that there is also some planning opportunities around this. So that's what I want to highlight next briefly, is what are those opportunities for tax advantage planning? What if we do see an increase in individual tax rates? What if we do see a decrease in the estate tax exemption and an increase in estate tax rates? Or what sort of planning can we do for those Secure Act opportunities? And I think the time is right for insurance-based wealth management solutions as it relates to retirement planning. So often, and maybe if you're a producer, maybe you're already using something similar to what you're seeing here on the screen. I know oftentimes I hear agents or advisors talk about, a tax triangle. And a lot of times they'll draw it on a yellow pad, right, with clients in the office. They'll say, listen, Mr. and Mrs. Client, here are the three different buckets that really provide itself to tax planning. You have qualified retirement plans, which is tax deferred. You have, non-qualified investments like mutual funds and stocks. And then you have, cash value life insurance or Roth IRA, which is tax advantage. So you've got before tax, after tax, or again, the tax advantage type planning. When it comes to what clients are doing, most often, if you draw, these three different buckets for a client, I would probably guess it's somewhere around 90 to maybe even 95% of the client's retirement assets, right, they're saving for retirement, are probably going to be in a tax-deferred bucket, like a qualified retirement plan. Maybe it's their employer's 401k. And there's certainly nothing wrong with contributing to, employer's 401k. Oftentimes you get, free money. You don't want to leave it on the table. You get an employer match. And so it definitely, benefits someone to participate in a qualified retirement plan like a 401k. But what happens if they put all their eggs in that basket? If all their eggs are in that basket, that means their funds will grow tax deferred, but at some point when they retire, they're going to have to tap into that and start taking income. And as we've shown earlier, what happens if tax rates increase? Today, that person could be at a 22% tax bracket. When they retire, they could be something like 1980 in that 49% tax bracket. And so if you've deferred paying taxes to the future, to 15, 20, 30 years in the future, and if at that point in time tax rates are higher, think of the impact that is going to have on you. You're going to have to cash out more of your 401k so that you can net after taxes the amount that you really need in retirement. And so I would argue that's not a well-diversified plan if all you're doing is putting money in either mutual funds or something like a 401k. It would make sense to diversify your standing and say, you know what, I don't have any of that tax advantage money. I don't have any of that tax-free money. I need something like a Roth IRA, or in this case, cash value life insurance, that will allow me to grow money for retirement tax deferred and take that out tax-free. And by the way, life insurance is the only vehicle that we have that allows for tax-deferred growth, tax-free income, and if you happen to die along the way, a tax-free death benefit to your beneficiaries. So the opportunity here is to get to have that conversation with clients on, let's write this down on a notepad, right? Where is your retirement money? Where are you accumulating it today? And how are you going to offset that if taxes go up? Who are the ideal candidates for this type of conversation? I would say high income earners, certainly business owners. Typically, it's going to be someone, obviously pre-retirement, so maybe ages 35 to 55, or maybe just a client who has approached you or is curious about, how do I diversify my tax situation? How can I, do some tax advantage planning? And at North American, the product that we have for that is called our Builder Plus 3 IUL. Moving on to estate planning, right? We talked about the possible lowering of the estate tax exemption, increase of estate tax rates. What impact would that have? I often tell people, when I'm talking about estate planning, why would you want to pay dollar for dollar? If you've spent, most of your life building and accumulating wealth, the last thing you would want to do with that money is to write a check to Uncle Sam, or to have your estate or your beneficiaries write a check to Uncle Sam, right? Why would you pay dollar for dollar for taxes when instead you can utilize and leverage life insurance? So this example here, we've got a 6-year-old female, and let's just say that, based on her estate, her net worth, she's going to have a $1 million tax liability. Why in the world would she want to have $1 million, dollar for dollar, come out of her estate to write to Uncle Sam, right? Doesn't make any sense. Instead, if she can get life insurance for that, to cover that $1 million liability, so she would get a guaranteed death benefit of $1 million. So when she dies, right, her estate would have that death benefit, go back to that, and then they can write a check to Uncle Sam. So I'm assuming that, let's assume that she buys a life insurance policy at age 60, and she pays premiums to her life expectancy, which we're calling 85. From the time she's 60 to the time she's 85, she would have paid approximately $400,000 in life insurance premiums for a $1 million death benefit. And so what you're seeing here on this chart is, again, if you have no estate plan, if you don't utilize life insurance to leverage, then your estate is going to be responsible for the entirety of the tax, dollar for dollar, $1 million. Instead, pay the premiums now. And if she dies at 85, that would have been $400,000 in premium, far less than $1 million. And that $1 million death benefit would cover the rest. What type of clients, who are good candidates for this conversation? Again, clients with a potential tax burden. And I would start looking, again, it doesn't have to be those with an estate over 11.7. I really think that's going to come down, and this is going to impact a lot of clients who are possibly in that $3, $4, $5 million range. Those are clients that need to be thinking about this type of planning and this type of opportunity. Clients who are legacy oriented, right? Clients that have come to you and they say, we want to leave money to kids, grandkids, and charity. How do we leverage the dollars we have? Because we would like to leverage those dollars and turn it into something more. Typically, it's going to be older clients, right? That's not, you generally don't see, 35-year-olds that want to talk about this or thinking about this sort of planning. So it's probably going to be clients 55 years or older. And it could be, like we talked about Secure Act, maybe it's someone who owns an IRA that has a non-spousal beneficiary. So if you ask a client, Mr. and Mrs. Client, do you have an IRA and who is the beneficiary? If it's a kid, if it's a grandkid, if it's a trust, if it's a charity, those are great planning opportunities to say, you know what, with the elimination of the stretch IRA, we could possibly propose a better solution to transfer that wealth. The product that we have that is a guaranteed product, you can dial that guarantee all the way to age 120, is a Protection Builder IUL. So I know I've covered a lot of things here. In wrapping up, I would just ask you if there's anything that you want to learn more about, whether it's concepts or the products, please reach out to your IAMS team. They are well-versed with North America's products, with all these sales solutions for your clients. And again, appreciate the opportunity to be with you this morning. So with that, I will turn it over to my colleague on the annuity side, Tia Stanley. And Tia, just give me a second while I get the controls turned over to you here.
Yeah, no problem. And Andrew, again, thank you. Appreciate great presentation overview of this tax storm we have on the horizon and some solutions there on the life insurance side. I'm going to make you the presenter, Tia. Hopefully, you'll be able to open up your slides. And Tia Stanley, who's Vice President of Sales over on the North American Annuity side, and had an opportunity to work with you, Tia, a couple places, and you're a great contributor also to the National Association for Fixed Annuities, where she's been instrumental in helping the education committee. She's the one of the NAFA Next Gen Award winners, and I can see your slide deck there, Tia. So I think you're ready to roll. Thanks for joining.
Perfect. I appreciate that. And I absolutely love the setup that Andrew gave me. Andrew, remind me to take you out to lunch because you did an absolutely beautiful job of describing how North American can be such a partner with all of the financial professionals, pardon me, that we have on this call, and also exactly where we fit, how we can help them when it comes to the clients and prospects that they're talking to. One of the things that you had mentioned was the Secure Act. And again, you really did set me up for success here. Now, because what I wanted to do is highlight a few things about the Secure Act, and then I wanted to go into how North American on the annuity side can help support when it comes to anything from a Roth IRA to a non-qualified stretch to an inherited IRA. We're absolutely going to be your home for that. Before we get into those details, though, a question I wanted to ask, and of course, we will continue to keep you muted. So I'll say, hey, ask yourself this question. Do you actually know what SECURE and the Secure Act stands for? That acronym actually stands for Setting Every Community Up for Retirement Enhancement Act. Well, that's a mouthful, right? So we're thrilled that they are using the acronym SECURE. But I wanted to give you just a little bit of background on the Secure Act. This was actually passed by Congress and signed into law by President Trump in late December 2019. And what this was a bipartisan package of laws designed to enhance access, right, retirement enhancement, going back to the acronym, designed to enhance access to and grow retirement savings options for American savers. And this actually included more access to workplace savings plans, which I thought was pretty neat. So certain Secure Act provisions are also advanced in reaction to Americans living longer and working longer. That part's huge. So what that included was changes to the required minimum distribution, or again, another popular acronym, the RMD laws, and broader access to lifetime income and annuity options. So the Secure Act, really, if we're going to put this in a nutshell, it impacts many retirement plans that are in place today, such as IRAs, individual retirement accounts, and 401ks. And most of the provisions in the Secure Act took effect on January 1st, 2020. I know that Chris and Andrew will chuckle to themselves when I tell you that the entire insurance industry had about 2.5 weeks to comply with the Secure Act. And that's probably why a lot of you tuning in noticed that there were a lot of carriers out there that said, whoa, pump the brakes. We're not going to be able to support non-qualified stretches or inherited IRAs anymore. And I'm thrilled to tell you that systematically, North American can. So of the three topics that I'll cover today, Roth IRAs, inherited IRAs, and also non-qualified stretches, I wanted to tell you when it comes to Roth IRAs, that is a retirement plan that we accept here at North American. This needs to be fully converted prior to North American receiving it. And also, if you have an existing IRA here at North American, you can fully convert that to a Roth IRA. So very happy to tell you that. But what I'm going to go into is actually what you see on your screen right here. If you have non-qualified stretch or inherited IRA business, why not give North American a try? For those tuning in, if you're not currently licensed with North American on the life or annuity side, we'd love to welcome you to the North American home, really. So we want to make sure that you know that we are open for business for those non-qualified stretch and inherited IRA accounts. And so what I wanted to do is actually break those down, go into a little more education on what those exactly are, and then let you know what product availability looks like. So when it comes to a non-qualified stretch, what are we talking about here? Well, that's when wealth is distributed out of equal payments over the remaining life of the beneficiary. The account balance remains tax deferred, and the payouts can be transferred to a contingent beneficiary in the event of a beneficiary death. So what we're going to take a look at here is some great product availability for your non-qualified stretch cases when it comes to North American. For that new business, you'll be able to send that on Performance Choice 8, which is our short-term accumulation play. Also, our best-selling fixed indexed annuity, Versa Choice 10. That product, not only is it fantastic for accumulation potential, but it also has a first-to-market liquidity rider called the ELB, the Enhanced Liquidity Benefit Rider. So you can feel free to add that to your non-qualified stretch if you choose to do so. Now, 2 items that you'll want to double check before you write that non-qualified stretch application to North American would be this. Number 1, it has to be a natural owner. The second thing that you'll want to double check, and this is more so for our inherited IRAs, that we need to receive those funds within 12 months of the original owner's death. So you'll always want to double check those 2 items before completing that application. If you ever have any questions, I love this slide that Andrew had up. IAMS, they're amazing. There's such a wealth of knowledge. Make sure you contact your IAMS family to get those questions answered. Okay, so let's go ahead and move it along to inherited IRAs. So when it comes to inherited IRAs, of course, these were designed for retirement plan beneficiaries, may provide continued tax-deferred growth, lessens immediate tax impact, and you can see no early withdrawal tax penalties, even if under 59 and a half. So take a look here when it comes to inherited IRAs. Here's what I love. When I say North American Annuities is open for business, we mean it. So we recognize that there's established inherited IRAs, and there's also going to be those new inherited IRAs. Any inherited IRAs where the date of death was on or before December 31st, 2019, you've got some great product availability. You've got our Charter Plus series, which we've had around for a very long time. You have access to our MIGA, the Guaranteed Choice series, and you'll also see some repeat players here, our Performance Choice 8, which is our short-term accumulation play, and our best-selling fixed indexed annuity, Versa Choice 10. Now let's go ahead and fast forward, complying with and abiding by the Secure Act. What about those new inherited IRAs where the date of death was on or after January 1st, 2020? Your product availability, it does change. Andrew had hit the nail on the head talking about this earlier, where you're taking a look, instead of stretching it out, I'm doing air quotes forever, what you're actually doing is stretching it over that 10-year period of time from the original owner's death. So your product availability, so we can comply with that, is going to be our Performance Choice 8, or short-term accumulation play, and also our North American Income product, which is our SPIA, and that's available on the 5 to 9 year period certain. So what I'm going to do is actually go into something that makes North American really unique when it comes to those newly established inherited IRAs that have to abide by the Secure Act, the date of death on or after January 1st, 2020. Now, I apologize if this looks a little bit like a visual seizure here, showing you the inherited IRA distribution form. I promise you I'll make the best use of your time, and I'm not going to go through absolutely everything here, but I absolutely wanted to show you an example of how North American is unique. So when it comes to those inherited IRA distributions, for those inherited IRAs where the date of death is on or after January 1st, 2020, to take payouts or distributions during that 10-year period of time. At North American, it's optional. I know there's a few questions out there in the industry, and Ed Slott has done a really good job of highlighting this. That way we have more of a black and white detail to figure out, okay, are RMDs required during this time? Are they absolutely necessary? Right now, that's not clearly defined. So what North American is doing is saying, hey, if you want to take distributions during that 10-year period of time, you're more than welcome to. It's optional. But here's what we're going to do is run you through how this will play out here at North American. And I love the bullet points. So it reminds you that this form is only to be used if that deceased date of death is on or after January 1st, 2020. I had touched base on the 2 items you need to double check, not only the natural owner, but also we must receive these funds within 1 year or 12 months from the original owner's date of death. That inherited IRA with a 10-year rule must be paid out to the owner no later than December 31st in the year of the 10th anniversary of the original owner's death. So it's saying any remaining contract value will be dispersed on that last business day of the 10th calendar year after the deceased's date of death. So really, in a nutshell, what we're stating is that if you want to set up distributions, but in that 10-year period of time, the client can optionally do that if they want. If they want to let that money sit there and accrue positive market performance, they can. And we're stating whatever the accumulation value is, we're going to pay it out no later than December 31st in the year of the 10-year anniversary of the original owner's death. So to me, I love that you have the flexibility when it comes to North American, and this is massive, especially compared to, my goodness, I think there's only 2 or so competitors we have out there that will accept inherited IRAs. They don't do this. North American does. So I want to make that really clear, and I know IAMS is pretty passionate about how North American is unique in that scenario. So when it comes to material that we have for you, to educate you, to educate your clients, we have so many amazing flyers that break down inherited IRAs and also non-qualified stretches. What you see on the screen, I love how we split down. Okay, so what's available? What are the rules looking like pre-Secure Act and post-Secure Act? If I could do a chef's kiss right here, I would. This is one of my favorite flyers that we have. When it comes to other information that we have, I wanted to showcase the items that we have for the non-qualified stretch. These are just 3 pages of the brochure that we have that's educational on what a non-qualified stretch is, what the benefits are, which I think is great for you to showcase to your clients. That way they really understand why would you want to move forward with a non-qualified stretch option, and then how North American can support them. Last but not least, when it comes to the Secure Act, we have an amazing Secure Act FAQ. The things that I love about this is that, the different categories or paragraphs, it's not like you have to read this super boring white paper. I'm going to put it out there. Sometimes white papers are hard to read. I love that we have it broken down to where you can figure out, okay, what do I want to read first based on that larger, bolder print. Now, a recognized name that you guys have seen out there time and time again, it's going to be Ed Slott. And he has a great white paper that he built in conjunction with North American Annuities on the insights and opportunities from Ed Slott. So if you're wanting access to those white papers, I don't have a beautiful slide like Andrew did, but I'm going to verbally tell you to contact your IAMS family for any of that information that you're wanting to take a look at. And remember, North American, when it comes to weathering the storm, you have a home with us on both the life insurance and the annuity side. So with that, I'm so thankful for the time. Chris, I'll go ahead and pass it along to you. And, really thank you for an amazing intro, an amazing opportunity to be able to present with Andrew today.
Absolutely. Well, thank you. Thank you both, Andrew and Tia. You guys are first-class professionals, outstanding company, obviously with North American, been leader in the business for so long, and certainly have the top talent out there. So thank you for that. I think great overview. There's a lot of information there. I call your attention. We have a macro tax planning kit and some other resources. We can go through each and every one of the pieces that we covered today. And if you have further questions, I'm sure we can hook you up with Tia and Andrew and get you more details on some of those plans. We have an experienced sales team, both annuity and life, that can help you. So with that, we're going to wrap it up. Biggest thing is go check out our website, IAMSinc.com, and give us a call at 800-255-5055. Thanks again for your partnership, and thanks for everybody that was on this program today. We appreciate your time and look forward to hearing from you.